Okay, we're live. Hello there. I'm Mitch Goldberg. You know that when it's 4:30, we start the live stream. This is your post-market show, all about the stock market, the economy. How should you invest? What should you expect? How do you stick to your long-term plan? How do you make sure you're on the right path to a successful retirement, a successful paying for your kids' college education, and overall, maybe just getting through the month on your cash flow without running out of money. We talk about everything financial here, insurance, mortgages, the home buying process. We talk about estate planning. We have so many terrific guests on the show. Today's focus, though, is on the economy. That's what we're going to talk about. We're going to talk about two terms that you need to know about, and you're going to hear about a lot more. The first one is soft landing, and the second one is hard landing. They're important terms, and you're going to hear these a lot more. And they're pretty popular now, but you might not have heard them. I'm in the industry, so I'm in the securities industry, so I follow this stuff religiously. So if you have any questions, hit me up in the comments. I love hearing from you. It's the best part of doing this. And while you're watching, if you'd like, hey, give us a thumbs up, a heart, an applause, a celebrate, whatever the reaction is available to you, depending on which platform that you are watching on. We are streaming live right now to YouTube, LinkedIn, Facebook, and Twitter. And we always share the highlights on all of these platforms, as well as on Instagram. I'm at InstaMitchG. Go ahead and follow me there if you're on Instagram. Sometimes I post stuff that's a little bit more quirky and I think funny on Instagram than I ordinarily would on Facebook, LinkedIn, or Twitter. But I hope you get a lot out of the show. It's all educational. So here's what we're going to talk about: the economy, odds of a recession arising. The Federal Reserve Chairman, Jerome Powell, has acknowledged that in not so many words. We'll go over his statement that put the kibosh in the market today and why the market was up a lot today. We're going to continue the rebound from yesterday, but it basically closed kind of flat. So let's roll a quick intro. I appreciate you joining us. And it's going to be a good show. It's going to be super, super informative. Here we go. Hey there, I'm Mitch Goldberg. Thanks for joining me. We're just getting started. You haven't missed anything yet. We're talking about a soft landing, a hard landing, the economy, recession, the stock market, investing, what you need to do to get through it. And more importantly, the more you know, the more likely you are to not only stick to your guns, to your investment plan, and not bail out of your 401k or whatever at the bottom of the market, but you're also more likely to spot opportunities. And sometimes the best opportunity in front of you is to do nothing. That could be the best opportunity. In fact, I would say for most people, the best opportunity is to really do nothing. People think they have to find some new opportunity. And I want to emphasize the word new. I have to find the new stock to buy. I have to find the new crypto to buy. I have to find the new mutual fund to buy. Whatever that new thing is, people love new. The new technology, the new drug stock, new. We love new. And sometimes you already have a good portfolio, but you're bored with it, or you just don't think it's good, or you lose confidence because things are down. Listen, you could go into the new thing too. Eventually that'll be down too because everything fluctuates. Okay. Investments don't go up in a straight line. And sometimes you get into the new shiny thing like a crypto, like Dogecoin at 70 that goes down to what, 6 or 8 cents because a wealthy person touted it, namely Elon Musk. I really can't stand when people make these mistakes. I feel bad for people who make these mistakes when you follow somebody so willingly and blindly without really inspecting if it's right for you. When people say to me, hey, should I buy Amazon? It's going to split 20 for 1, for example. It already did split 20 for 1. The answer is it depends. If your goal is to be a shareholder of Amazon, then and you have the money for it, then go ahead, buy Amazon. If that's your goal, you've got the money, the risk tolerance, the time horizon, sure. But that's usually not a goal. And so I say, what's your goal? Well, I want to make money. Well, do you have a job? Are you making money there? Well, yeah, but I want to make more money. It's not enough. I have to be able to invest for retirement. Well, how does Amazon and how does owning a share of Amazon or shares of Amazon after a split or just before a split, how does that help you make more money? Because Amazon stock has gotten just absolutely squashed in the last couple of months. So it hasn't really helped you achieve a goal of making more money. You see, you have to set aside the goal of making money and the goal of investing. You know, to me, making money it's not really synonymous. I know you're thinking, Mitch, what are you talking about? It's all about making more money. No, investing is about yes, it's about making more money. It's about compounding. It's about turning your money into more money over time as a company's earnings grow, revenues grow. For whatever reason, a company's stock would go higher. Could be because of a change in interest rates. So many things affect the price of a stock. And even when things are going great for a company and in the economy, stocks could still go down. The randomness of the randomness of short-term trading of anything is it's just noise, random noise. It's really not something that, in my estimation, most people can predict. It's not something that they could trade off of. All right, that's most people. I'm not saying that there's not some professional out there who does this full time for a living and watches securities and trades and maybe is right where she's right, 55% of the time, which is probably makes that person one of the best traders ever. But I'm talking about the regular people. So what's the goal? Is the goal to invest money and have it grow over time, over years? That's a goal. Now, does Amazon help you if it goes up? Well, yeah, anything would help you if it goes up. So then, but I try to explain this to people. That's not the goal, though. Is Amazon? Amazon is just a tool. When you buy individual stocks, you are also taking on increased risks and new risks, as opposed to buying, a passive index fund like a fund that tracks the S&P 500. You can't invest directly into an index like the S&P 500, but you could invest into a fund or some other investment product that tracks or mimics the index. Okay, but what we need to do is find out what you want to build. Kind of like if you want to build a house, you don't just say, I'm going to buy lumber and tools. Yes, you see what I mean? You have to buy lumber and tools to build a house. You have to buy cement to build the foundation. You have to buy wiring for the electric. Okay, copper pipes for the plumbing, PVC pipes, whatever you use. All the things you have to buy, the materials. And then you have to hire the people to put it together. But that's not how you build a house. If it was just buying building materials, I would just order building materials, on Home Depot, and I would have a house built. Okay, so the question is, what kind of house? Maybe it's a house that it's an apartment building that is reliant more on steel and cement. Maybe it's a big house. You need to order a lot of materials. It's a small house. How much quantities of everything? How much of everything should you buy? Where should you buy them? Who are you going to hire to create the plan to build the house? It's not just a matter of buying a stock like Amazon, and that's helps you build a goal. It's no more than buying tools and lumber at Home Depot is how you build a house. It's you have to buy tools and lumber, but it leaves out so much context, so much instruction on what you need to do. So how about you tell me your goals, what you want to do, what you're trying to achieve, and I'll let you know if owning Amazon could or should be a part of your toolbox, if it should be a tool in your toolbox. Maybe it should, maybe it shouldn't. Now, I do build portfolios for clients that use individual stocks, and maybe Amazon could be part of it, maybe not. It depends. Maybe we're just going to use exchange traded funds or mutual funds or passive index funds. It depends. Tell me the goal, and I'll tell you how much lumber you need, how much electric copper, how much wire you need, how much plumbing materials you need. How many bathrooms do you want this house to be? I mean, I'm not going to send you 4 toilets if you're only going to have 2 full baths, right? or 2.5 baths, whatever, then 3 toilets. So, you know, hey, listen, I don't mean to have a potty mouth. Get a toilet, say potty mouth. I'm getting off track here, but that's how you build a house. Okay, so it's you build a portfolio and an investment plan by knowing what the goal is, and then you find the materials and the tools that you need, and the labor and the plan, like the architectural drawings, to figure out which steps you have to take, how to put everything together, and what quantities you need everything in. I hope that analogy makes sense. I'm on for 10 minutes to make that one quick analogy. Let's just roll the intro here, and we'll get on to the heart of the matter of what we're talking about today, okay? Wait a minute. I rolled the introduction already. Excuse me. Okay. It's a long day, all right? Okay, so let's talk about a couple of things. Hard landing versus soft landing. The Federal Reserve has a very blunt instrument that basically affects the whole economy, and that's its power to control short-term interest rates. We're talking about the federal funds rate primarily, secondarily the discount rate. Let's just call it short-term interest rates. The Fed could raise and lower short-term interest rates depending on whether if it wants to speed up or slow down the economy. If it wants to slow down the economy, it raises rates. It makes the cost of credit, the cost of borrowing, more expensive. What's the cost of borrowing? The interest you pay. So if you pay 10% interest on something, your cost of the money is 10%. That's a cost. If you're only paying 2% on the money in interest, that's a low cost, right? That's 2%. It's a lower cost of money. So the Fed makes borrowing money more expensive, which slows down the economy, or it could make borrowing money cheaper, which could help speed up the economy. Right now, there's inflation. Duh. Fed wants to tamp down the inflation. So by tamping down the inflation, by raising rates, the Fed slows the economy. And I say it's a blunt instrument because when the Federal Reserve raises interest rates, it affects jobs, for example. Yes, we know that consumers hate inflation. They're getting ravaged by inflation, especially people in the lower socioeconomic incomes. They're getting hit the hardest with inflation. So you want to get inflation under control. But having a job is a good way to fight inflation. So if you slow down the economy and people start losing jobs because companies are doing less business, selling less stuff, or providing services to fewer people or fewer services to fewer people, companies have to cut back and they start laying people off. And then people get laid off, they spend less, or they don't spend at all, or they go on to social services, unemployment, etc. It just becomes a spiral, and it takes the economy doesn't move on a dime like that. It's up economy or down economy. So the Federal Reserve wants to raise rates, tamp down inflation. And I'm going to show you what the Federal Reserve said today. Jerome Powell spoke before Congress today. He said a few key things. We had a big rally in the market yesterday after a horrendous couple of months. It was just one day. My point to you in yesterday's show, if you missed it, it's okay. We'll catch you right up. That yesterday's rally is subject and is probably a bounce as opposed to marking the end of the bear market that we're in. You have to prove it to me that we're in a new bull market. Okay. It's just one good day doesn't change the equation for me. I don't think a market bottom is a one-day event. I think it's a process that the stock market needs to go through. So Fed wants to slow down inflation, not enough to cause the economy to go into a full-blown recession. Just wants to slow the economy down to tamp down demand. See, there's a shortage of supply of a lot of things, from clothing to toys to semiconductor chips to building materials to labor. So if the Fed can't raise the supply of all the goods and services that we need, that consumers and businesses want, then it'll go hurt us as consumers by lowering our demand, by making things exorbitantly or prohibitively expensive, which lowers our standard of living. On the other hand, inflation lowers our standard of living as well, because we're paying so much more for things. We're getting so much fewer things for the buck. I spend $200, for example, at the supermarket. I get a basket, a cart full of food. Now, it's like it's half empty when I leave, or half full. I say half empty in this case when I leave the supermarket. So Fed wants to slow down inflation, but not so much that it wrecks the economy and puts us into a recession. That's called a soft landing. I think investors, I've been saying this for a while, have given up on thinking the Fed could pull off a soft landing. I think we're in a hard landing. I actually think a recession has already begun, but that's just my opinion. We won't find out until the NABR, the National Association of Business Research. This is the body that has the official duty of calling the beginning and end of recessions. So they don't call it until after the fact. But a hard landing means the Fed raises rates, it slows the economy down so much that layoffs start to happen. People really rein in spending, and we go into a recession. How long could the recession last? Some people are saying, who were saying we don't go into recession. Now they're saying, well, we could go into a recession, but it'll be a shallow recession. Okay, it could be a shallow recession. It might not be, but a recession is a recession. That's really what I want to focus on. I know not all recessions are created equal. So that's the key: is a soft landing versus a hard landing. A soft landing means inflation goes down without the United States going into a recession. A hard landing means inflation goes down, and we do go into a recession. I think the hard landing is prevalent. The belief that we have a hard landing is prevalent. I think consumers, even though most people have jobs, they've gotten raises, I think people know or have a sense that higher rates are slowing things down. We're already seeing it. Retail sales are slowing down. Home building is slowing down. Existing home sales are slowing down. Consumer confidence is plunging. I've never, as of now, like right this second, the economy is okay. But I've never seen people be so negative on an economy when the economy is okay. But people are looking forward. They're seeing the rising price of gas and food and other items, and they're saying this is not okay. And if you did think you're okay because you had some savings in the bank and you have a nice income, all of a sudden you're not so okay because your income is just, maybe you're still losing money because of inflation. If your income went up 4%, but inflation went up 8%, that's not really enough to help you out. Okay. All right. So that's that. Let me show you my screen. Okay. While you're watching, don't hesitate to ask me a question, say hello, write in the comments right now. Say, hey, Mitch, what's up? It wouldn't kill you to put a comment in. If you have a question about the economy or the stock market, let's get into it. But let me show you a couple of things, okay? Here. Let me put myself in there. Okay. This is what Chairman Jerome Powell of the Federal Reserve said today. Okay. Powell added that the Fed will stay the course, raising rates, tightening monetary conditions until he sees compelling evidence that inflation is slowing down. He was asked if he sees any of that compelling evidence that inflation is slowing down. And he said, no, I don't see any of that at this time. That's what he said in testimony, okay? And then he also said, achieving a soft landing for the economy without a recession has become significantly more challenging. Significantly more challenging. You see that? Soft landing? He says it's significantly more challenging. The Federal Reserve basically, I think, is come to terms with the fact that it's it's raising of rates to bring down inflation has to cause inflation. It has to cause a recession. We have to put up with it, and it's going to hurt. So inflation hurts, but not having a job hurts even more. But when you're between a rock and a hard place, and inflation is the thing that everybody says you have to fight, he's going to fight it. So that's where we are. Okay. Citigroup says a chance of a recession is 50-50. It's such weird calls. Oh, you think we're going into one or not? I mean, a lot of analysts are saying maybe we do it. We probably will. We could. This way, if you say it's 50-50, opportunity or chance of recession, if it happens, you say, you see, I called it. And if it doesn't happen, you get to say, you see, I told you we wouldn't go into a recession. The straddling of the fence answers I can't stand. I think we're in it. Goldman Sachs says the odds of a recession higher. Jamie Dimon from J.P. Morgan said something similar to that. UBS said we don't go into a recession in 2022 or 2023, but the odds or the risk of that is rising. So the negativity is actually starting to really build up a lot, which is probably why the stock market rebounded yesterday. Okay. Now, just because there's a recession does not mean that the stock market has to go down. Typically, the stock market will go down heading into a recession, maybe through the first half of a recession. And then the stock market starts to climb out of it in the second half of a recession. So by the time an official announcement of recession comes out, we'll probably be through it as far as the stock market is concerned. The bear market would end. Bear markets and recessions don't they track well, but they're not perfectly correlated. Okay. So oil is down also. So let's take a look at everything. Well, I got you, then I'll let you go. Okay. All right. So the Dow was up today, and I seriously, when the Dow was up over 600 points yesterday, and a lot of people were saying it's a good bounce. The bounce could carry us for a couple of days, maybe a week. Someone on CNBC yesterday on the Fast Money show, I think it was Guy Adami, said he sees a rally for the next couple of weeks, maybe a month or two, maybe the summer, and then we sell into it and we go down again. I don't know. I mean, people getting very specific with their calls. I do think the market would have rallied. It was up nicely this morning, but those comments from Powell that says achieving a soft landing, meaning slowing down demand, lowering inflation without causing a recession, the odds of that are really going lower. So I think the Federal Reserve is basically telling you, it's preparing us that we go into recession. We talked about how to prepare for a recession. We'll do that again, but you better have savings, low interest debt, and be able to tough it out for a couple of months, especially if you get laid off, okay? Or if your spouse gets laid off or your significant other. Okay, so Dow down 47, NASDAQ down 16, S&P down 5. Gold up a drop. It's barely even noticeable. Oil down another $5. Remember, it was over 120. So oil is coming down a good amount. And as a result, yields are coming down. So the whole yield curve, short-term rates and long-term rates have actually been backing down. I'll show you that in a second. And the VIX is back under 30. So all of a sudden, with the VIX under 30, that's this number here, it looks like a lot of nervousness is starting to be let out of the balloon. Rates were down across the board. This is actually kind of bullish. The 2-year 3.06, the 10-year 3.16. Rates are down. The 10-year is up to 3.4. By the way, the 30-year mortgage rate is tied to this right here. It's most closely associated with the 10-year yield. But yields are coming down. That could be kind of bullish. Maybe there are some people who think the inflation story is starting to peak. We're just going to go back and forth with these thoughts for months. And I want to take a look at energy stocks, okay? Oxy, was 74, down $2 today, down to 55. ExxonMobil was just over 100, highest level like since 2014 or something. Now it's down to 87. Chevron was 182, down to 147. I don't think people realize how hard energy stocks have been hit. Conoco 124 to 93. It's like a $12 stock going to 9, right? And all you've been hearing about is, you could still buy energy, you could still buy oil stocks, you could still jump on them and ride them higher. They've already peaked. The crescendo has passed. Clearly, I have evidence because I'm looking at the highs that were very recent and where they are now. The peak has come and gone. And this is what happens when people start to get excited over an asset class or a sector or a stock. They start to go into them. People bought small cap oil stocks, and here we are. I mean, if you're a client of my firm, you know that we were profit takers about 2 weeks ago on some oil stocks, and you saw those in your account or your email alerts or the confirmations you received. You saw that we're taking profits on energy stocks, and we haven't deployed it. Haven't seen anything compelling to do with the money at this moment. Cash is pretty cool right now, and we're holding up pretty good because we've got some nice sized cash balances. But that's because we've sold. We took profits on a big retailer recently that was up at an all time high. We didn't sell them all. We sold, generally speaking, we sell pieces of these stocks as they go up. So careful when everybody starts saying you have to be in energy because it became such an overcrowded trade so quickly. Kind of like the beginning of the year, when investors were crowding into mega cap stocks and financials. Anyway, that's my story for today. I'm sticking with it. I thank you for joining me today. I hope you got a lot out of the show. And I'll see you tomorrow. I can't believe tomorrow's Thursday already. Thank you. Goodbye.